Yo, yo, yo. CPA Strength here, back with another video. This is a highly requested video. This is about getting a 1099 and what you would do with that. So I tried a new program and everything, and we'll get into it. Here's the new postcard, what they're calling the new tax return for 2018, I guess beyond now. It is just simply the first page is whether your filing status, your name, your address, different stuff. But the meat and potatoes of the tax return is on this second page here, and it is just 23 lines. It's been like 74 lines before, and really the only thing that I put in, I filled out a Schedule C, and that's what you would do if you get a 1099. That means you worked. What is a 1099? A 1099 is if you worked for someone during the year and they did not take taxes out. You're an independent contractor, meaning you're self-employed. And that being self-employed is going to bite you in the butt. Now, we'll go over everything, but I just want to show you, we made in this example, you got a 1099 for $30,000. I kept it easy, and then we had deductions of $10,000 to make it a $20,000 profit of your business income. Now, think about it from the employer standpoint. They didn't have to do anything but cut you a check. Now you got to do all this work. If you get a W-2, you can pretty much go on any tax software, a free file. You can almost probably just do it yourself. The calculations are rather easy. Now for this, look at all these calculations. You just input it into one, that you made $20,000 and all these different calculations. So you're gonna have. I would suggest, if you get a 1099, I would really suggest you go to a tax professional and get this done and get your tax return done, because the errors you can make, the deductions you can have, and we got this new one, qualified business income this year, and so common question I get is, do you have to file a separate tax return? Now, if you get how do I file a 1099? It's still always on the 1040. If you get money to your Social Security, whether it's, now you can have 1, 2, 3, 4, 5 W-2s, you can have 1, 2, 3, 4, or 5 Schedule C's. It doesn't matter. If it's to your Social Security number, you're going to file 1040. Now, if you get a you're not going to get a W-2 not to your Social Security number, but if you get a 1099 to an EIN number to your business, you might or might not have to file a separate tax return. It depends how that business is being taxed, because it could be a disregard entity and it be on a 1040. But if a 1099 sent an EIN number, it could be taxed as an S corp. It could be taxed as a C corp or a partnership. Don't know. So basically, if you got a 1099 and you had $20,000 profit, you're going to owe $3,354. So let's just go over the 1099. Let's go over the tax return here. And how did this come about? The first thing on here is $20,000 on line 6, and that came about from Schedule 1, line 22. Now they just put 6 new schedules in this year. So let's go to Schedule 1, line 22. Here's the Schedule 1, line 22. This $20,000 right here. Mind me, this is the first year out of my 8 years of tax preparing that they're doing a new schedule. So it came from this. It came from this $20,000 from the Schedule C. Where's the Schedule C? Okay, here is the Schedule C. Now I thought this would be, you got your 1099 for $30,000. That's how much you got it for $30,000. I just randomly put a $10,000 in this expenses. You might have more or you might have less expenses. I don't know. A whole bunch of expenses are up here. I just wanted to show you that I just want to show you the layout of this. So you'd have a $20,000 profit from your, so $30,000 minus $10,000 expenses. Now, whatever your 1099 says, that's being furnished to the IRS. So you would have to put that in the income. So you have $20,000 of net profit on your Schedule C. Schedule C, see, profit or loss from business. So that is where this number comes from on the Schedule 1, the Schedule C from the Schedule 1, and that flows through all the numbers flow through to these to this one page of tax returns here. Everything flows, all the different schedules flow through to this page here. So this is where this $20,000 flows in from. Now, you get half off of your self-employment tax, which is down here, deducted from your adjusted gross income. So we're not going to go over that. But that brings your income down to 18,587. All right, it is down in here, this 14 deductible part of self-employment tax. It just reduces your income by $1,400. Now you get your standard deduction. See, all your incomes would have been in here. Whether you see, I've gotten a question before. What if I have a W-2 and a 1099? Do I have to do 2 separate tax returns? No, they're both going to be on this one tax return. So now we have our $12,000 standard deduction because we're single. See, we're single right here, and yeah, we were single. So we have $12,000 standard deduction. Now this new part, this is why I say pass-through entities and Schedule C businesses have this new jobs cut feature, which is qualified business income, and that could be 20% of your pass-through income. So it could be 20% of your adjusted gross income, but it's after deductions and everything. So we'll go to the sheet, but you basically got $1,317 from a qualified business income deduction, and this is brand new. So you've got the standard deduction doubled this year, and you got qualified business income deduction, which is brand new. And we can go over that. This is why I say if you have a Schedule C, I would say go to a professional tax preparer who has the software to do this, because they're not going to do it by hand. But are you going to do this by yourself? Good luck. I mean, God bless you if you do, but I would say just take it to a professional. And they might charge $200 to do a Schedule C, but it's done right, and you get all your deductions. So you get $1,317 qualified business income deduction. That's 20% of 6587, which is your income after your standard deduction. So there's a lot of different things in play. So no, you don't get, if you had more income, like if you had W-2 income, you could get up to $3,700 off for your qualified business income deduction, but that's not the case. So you get $1,317 qualified business income deduction. And this is all these forms here. All these forms is because now if you just had a W-2, there's no more, because I did a tax return with a W-2. You'd put your W-2 income right here. You'd put your federal tax withheld right here, and then that's it. There would be no other forms. That's why with a 1099, the employer's kind of putting the onus on you, because now you have to, I would say, get a professional to do your tax return. Or I'm not sure on the free softwares, I think they would charge if you have a Schedule C on there. But so just having the Schedule C, you're gonna have the Schedule 1, you're gonna have a Schedule 4, you're gonna have a Schedule C, you're gonna have a Schedule SE, all these different forms. Anyways, where were? So I've been super excited. My clients have been super excited about. A lot of my clients have S corps, and they've been super excited to get this qualified business income deduction. It's awesome. That's all I'm going to say is it's awesome. So after your standard deduction, your qualified business income deduction, your half of a self-employment deduction, you're down to taxable income of $5,270. Looks like 10% of that is your tax. So this is the tax you owe off your income, $528. Now, here is the kicker about why if you've been getting $1099 all year, you have to pay pretty much 15% in self-employment tax. This is the tax you would owe, the self-employment tax. And see, it doesn't matter how many deductions you have or anything. You could owe zero tax, but you'd still owe self-employment tax. Is still 15% of your profit. It's not quite 15%, but it almost is. Well, 15% of 20,000 would be 3,000. So you almost owe 3,000 in self-employment tax. It's a little bit less because they deducted that 1,400 before. But this is the kicker. Why is it 15%? Because you're considered self-employed. Now, this is another part where the employer put the onus on you and said, "Hey, you're an independent contractor. You're not an employee," because for those of you who have gotten a W-2 before or been an employee and gotten a paycheck, you don't get the Social Security and Medicare. They take out 7.65% of your paycheck for that, and your employer matches that. You don't notice that. You just get your paycheck with 7.65 taken out for Social Security and Medicare. They also take out federal withholdings too. But your employer has to match that 7.65%. So you got money coming out for them too. So it's expensive to run payroll. Plus you have to probably have a payroll company. So it's expensive to run payroll. So it's a lot easier for them to just say, "Hey, you're an independent contractor. You deal with it." But now since you're self-employed, you have to match that 7.65. So that's where the 15% comes from. So you would owe $528 in tax, and then $2,826 in self-employment tax. So if you made in 2018, if you were single and you profited $20,000 from your Schedule C 1099 independent contractor business, you would owe $3,354 to the IRS. And that's that. Well, I guess I should have said this before because no one's still around. Comment, like, share, subscribe. If you want me to do a scenario, I can. And anyways, y'all have a great day and pay those taxes. Anyways, peace out, man. Laters.